Good morning, everyone, and welcome to the Quantum Leap Morning Leap Session for Tuesday, March the 7th, 2017. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro and a micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and then we create our hypotheses today. We create four main hypotheses in order to have a plan in place. So we wait to see what the market does after the open, who's in control, and then determine which plan best suits the market, and then we execute on that plan. We are not trying to predict the market. We're trying to create a actionable trade plan that we can implement once we see what the market is doing. This is a subscription room, so if you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to during the pre-market session, and then we do live trading and analysis during the course of the RTH trading session. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trading plan, and your own risk metrics. So let's take a look at yesterday. Yesterday, our main hypothesis, sorry, I've been having computer problems this morning. Yesterday, our main hypothesis, hold on one second. Sorry about that. Yesterday, our main hypothesis was an open auction just in range or just out of range, a move up into the range and testing the value area low, and then finding sellers and rotating us down towards our main target, which was the 68.75, and our secondary target, which was the 67, and the close of the range gap. That played out beautifully. Our secondary hypothesis was a move down here to the 68.75 to 67, and then finding responsive buyers and rotating us back up towards the 80.75 to 81 area. We kind of got a little bit of both. Although we didn't rotate all the way up, we could not get in yesterday's value, or the prior day's value area low, Friday's value area low at the 77.50. We just popped in and then we rejected it. And you can see that our value area high from yesterday is right at the value area low. So that's going to be, and we created a weak high here at the 78.25. So it's going to be an important level for us. We're currently trading 72.25. We're right smack dab near the middle of the gap. I expect us to chop around in the gap. We did create a neutral day. We broke the IB to the low side and the high side, and we ended up creating a double distribution day with an LVN basically right at the mid of the range gap. The LVN goes from 73.50 up to 74. So I don't need the mid anymore because we've already done that, but I am going to move my trade area down to the 73.50 because we've got the naked VPOC from yesterday. If we get back above in the upper distribution, I'm anticipating that on this double distribution day, we're likely to test both sides of the distribution and hit the 70.25 HVN. I'm sorry, 70.50 HVN and the VPOC. From the upper distribution, that naked VPOC within the first hour of trading during the course of the IB. Let's just step back, take a look at the news. Oh, I didn't reopen the news. Sorry, I gotta go get it. So 8:30 we had trade imbalance in Canada and U.S. 8 billion, 0.8 billion in Canada, a little bit larger than expected, 0.2 expected. And then the trade balance in the U.S. Was negative 48.5 billion, expected minus 47, so a little bit of a miss there. 10 o'clock, we've got Canadian IV PMI, and then we've got U.S. IBD, tip economic optimism, and then nothing really else until 3 o'clock. A little bit of headline news with Trump in terms of the new executive order on the travel ban. I'm sure they're going to be talking about that. Of course, the other news, his claims that there's been wiretapping. So it depends on what the headline news is, but not a lot of economic news today. Taking a look at the,
Doug?
yeah.
The screen's not going. It just keeps saying waiting to view on the thing. The screen's not working.
Oh. You're not seeing anything?
All you see is the screen, meet now, organizer Doug McKay, waiting to view screen. Oh, it just went now. Just now it finally clicked in.
Okay, let's reset here. Not having a good day with my computer today. All right, so let's just review. We can show this. Our main hypothesis was a move down to 67, 68.75, then 67. We got that to the tick, and then hypo 2 kicked in, and we started rotating back up inside of the range. Once we got inside of the range, it looked like they were going to give us a neutral, a move back up into the 80, but we failed at the value area low from Friday, and our value areas are now overlapping each other slightly. Overnight we've moved down, but we've come back up. We're trading at 71.75. We have a double distribution from yesterday. We're inside the gap zone, expecting both of these to be tested today as we get a rotational day inside of the gap zone. In terms of the news, as I said, we had trade imbalance out for U.S. and Canada. We beat, you missed, and then at 10 o'clock we got IBPMI for Canada and IBD tip economic optimism for U.S. and then there's really not much news beyond the headline news. Take a look at the macro to micro. As you all know, I like to start my day using a simple candlestick chart. I use a 9 EMA, 20 SMA on all my charts. What I'm looking for is I start in the monthly, work my way down into the intraday. I'm looking for slope and separation. What's the strength of the trend, where it's being challenged or violated, and any type of candlestick pattern that jumped out at me. Beautiful multi-year upward trend, challenged at the end of 15, beginning of 16, taken back. We had the rising 3 pattern on the monthly. We watched that, looking for continuation pattern. We got it. Went and put a new all-time high in. We got good slope, good separation to the upside. Trend is very much intact on the monthly. On the daily, on the weekly, same thing. Great slope, great separation. We don't even begin to challenge the trend until we get back down in the 23.30 area on the weekly. On the daily, we did create the FUBAR Mr. Sneaky with a technical gap. This is one of my favorite patterns. I usually trade it on the smaller time frame, but it is just as valid on a larger time frame. And what do? We come right back down and close the technical gap, and we're sitting and sitting right on top of the 9 EMA right now. Break below the 67, brings in that 62.75, 62.50 area, and possibly even a move down into the 40s and a test of the 20 SMA. But the trend itself is weakening. We're losing slope and separation, but it's nowhere near being violated. Going to the intraday, the 4 hour, you can see we did roll over, came down, got below the 9 and 20. We talked about this yesterday, that we'd likely close, come up and test that naked cross, and then we failed, and we're now getting a downward trend on the 4 hour. On the 1 hour, we got a consolidation pattern going here, really weakness coming in. We are below the 9 and the 20. So watch that 67 level. It's going to be very important to us today, whether or not we get down to the 62 area. Going to the 30-minute, you can see that we do have a downward trend, but it is starting to weaken. We tried to get above the 9. We're back below it. Coming into the RTH session, we do have weakness coming in on the smaller time frame. Same thing with the 15-minute, nice solid downward trend, basically starting at the European European Open, and now we're trying to pop back up on that news, and right now we're in a MA squeeze, MA hug, coming to a decision point whether or not we failed and get continuation or change of trend and a move back up. We do have a naked cross right here, up here at 74.25. So if we get above that LVN from the double distribution, that would be a very good target to go for, but I'd be looking at getting to that naked VPOC at 74.75. But definitely some confluence there on the 15-minute and the VPOC. And then on the 5-minute, you can see we're just chopping around. We are below the 9 and 20. No real trend here. Possibly start of a downward trend, but just a consolidation pattern on the 5-minute. Taking a look at the big picture and the structure, you can see here that we gapped up, went in, put that new all-time high at 24.01. Then we immediately had a bearish engulfing day, and then continuation on Friday. And so far, we tried to break below that 67. This CLVN has shifted. It was at 75. It shifted down to 67 with the time we spent between 67 and 74. 67 is going to be our key line in the sand. Below 67, look for that move down into balance, the 6-day balance down here at 62.25. I should say this is our warning line. Our key line in the sand is going to be 51. Below 51, I believe we're going to get a bigger retrace and some more gap close. We still have that naked close here at the 47. 75, 47, 48 area with the range gap as well, and move likely down to test that 43 to 41 area. And then above, you can see that we've got, I've added yesterday into this because we came up and we traded inside of the tail of Friday. Our 4-day value area low is 74.50, so we want to watch that level. You can see that there's this little LVN right there on on this above this little distribution zone. The HVN of that is right down at the 70.25, 70.50. Remember that the double distribution, the HVN of the lower distribution, and where we spent a lot of time or a lot of contracts where VPOC was a good amount of time yesterday, was at that 70.50. So really have the probability that we're going to get a lot of rotation. We have broken the one-time framing up. We broke it on Friday, then we confirmed it yesterday. So our one-time framing up on the daily has been halted, and now we're starting to one-time frame down. So let's take a look at the overnight. Overnight was a pretty tight range. 75.50 was the high, 70 was the low, so we have a 5.5 point range. Pretty tight. We just got a VPOC shift down right as I was speaking, down to the 71.50. It was up here at the 72.25. Most of the night it was up at 72.50. A pretty decent, Gaussian distribution. If I bring this to the front, this is a pretty balanced profile. We're basically filling in the auction in the gap where we were. We talked about that yesterday, that we're likely to auction out this territory. Our overnight high, 75.50, is right on top of yesterday's close. So, did we open up at 75.50? Yes, we opened up at We opened up at 75.50 and immediately sold off down to that 70.50, found buyers, rotated us, failed to get above the open of the Globex, and then came back down and basically just chopped. You can see we've got a zipper here and a zipper here on the overnight session. Our overnight low, 73.70, just below the value area from yesterday. And then, of course, we've got our VPOC at 71.50. Just one tick from where we are. We don't really need this half gap from close. We've already filled it. I haven't taken the gap zone out yet because we're chopping inside of it. But that's really all the information I need from the Globex session. There's really not much else to tell us. So let's get rid of this. Move this over and start putting in our levels. Okay, pretty simple. Trade area 77.75 to 78.25. Value area high and the week high that we put in yesterday, targeting the 80.75 and 81. The double distribution LVN, and then of course the 67. And that's really the only way we can play this. You can do the 70.25 if you want, but we're liable to chop around in this area because you're in a area of price acceptance from yesterday. So it's really not an area I want to execute on. I really want to play off. I mean, my key over-under line is going to be the 73.50. Above 73.50, I'm looking for longs into the 81, and below the 73.50s, I'm looking for that 67 test and a push down into the 62.75. So in terms of hypothesis, my main hypothesis is an open auction in range, a push up into the 74, 75 area, maybe up to 77, finding responsive sellers, rotating us back down into the 70 and pushing through to the 67 with a possible push to the 62.75. I'm expecting a rotational day that's going to fit somewhere between the 81 and the 62.75. So the hypo 1 takes us up first and then down to the 62.75. Our secondary hypothesis is an open auction in range, a push down, failure to break the 67 or a false breakout, find responsive buyers and rotate us back up into the 74, 75 area, and then chopping around here with late day push up into the 81. Hypo 3 is an open auction, failure to get above the 73, push down to the 66, 67, chop here, then fail and come down into the 62, chop some more, and then fail and come down towards the gap down here and that 51 CLVN. Our 20 period ATR is running at 15.11, so off of the high overnight of 75.50. Our downside ATR target doesn't change much. It goes down to 60.25. And off of the low overnight of, what's the low overnight? 70 plus the 15.11, 85.25. So that takes us up, and we don't need this then. That takes us up to our target that we had the other day, which was the 85.50. So those are my main hypotheses. The last hypothesis, hypo 4, is a push immediately up into the upper distribution, accept the 74, 75, and then push up into the 80, chop around here, and push up into the mid 80s and close somewhere back inside of the microcomposite distribution up around the CHVN of 85. Until yesterday, Friday and yesterday, the 2-day microcomposite VPOC was up here at the 50. Okay, quickly take a look at gold. We talked about this yesterday, that we were watching that 23 area. Oops. And if we broke below it, that we're likely to go down to the 1860. Here we are below the 22. It was 23 area yesterday. Now it's 2250, and here we are coming down into the microcomposite VPOC, expecting us to come down to the 1860 today and chop around here. Okay, between the 22 and the 11. But basically balancing out around this composite VPOC goes all the way back to October 24th, 2008. So it's the most traded price in gold in a very long period of time. So it is going to act as a magnet as we moved out of this distribution zone that was around that 27. We said if we didn't bounce off the 27, look for a bounce off of the 2630. We got down to that 2630. We bounced. I said look for opportunities to short it on the bounce and then look for the break of the 22, 23 area and a push down into the 1860. And here we are. So that's what I'm expecting. Rotation down here and chop around the 18. If we break the 1211, all bets are off for gold to the long side for the time being. I would be expecting a move. The next big destination down is all the way down here in the 92 to 95 area, and then we still have this naked microcomposite all the way down at 1180. We could come right back down into the mid 1150s because we still have targets down below. But right now we're right in major long-term price acceptance, so expecting a little bit of a bounce once we get here, but really chop around this area as we find some price acceptance there. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.